The Johannesburg Stock Exchange, JSE, is experiencing a resurgence in initial public offerings, IPOs, amid improving economic conditions in South Africa. Bankers anticipate interest across sectors like consumer goods, resources, and fintech. While South Africa remains a focal point, some African firms opt for offshore listings due to liquidity. Clive, Ramathibela-Smith, Senior Executive Partner, Hecare Capital and Partners, joins me to unpack this. Hello, Clive. Thank you for joining me today.
It's lovely being with you, my sister. Thanks very much for having me.
All right. So talking about the JSE, it saw 2 IPOs, against 11 delistings in 2013. But then in 2024, we have seen only 2 delistings so far. Is this something to be excited about? Do you think JSE is turning the tide?
The reality of the story is rather more serious than that, because if you look at the last decade, the last 10 years, the JSE has lost close to about 77 companies that have delisted. And if you look at over 20 years, they've lost about 10% of the companies that were listed on the exchange. So yes, it's a little bit of a relief because we're not seeing the
Clive, if you can hear me, I do not think I don't know if you're muted, but I can't hear you. Could you try to say something again so I can confirm? Clive, could you please say something? Okay, I guess we're having a challenge hearing him. But of course, we're looking at JSE, and then he's taking us back to 10 years ago, looking at 77 companies, the listing so far, and that is a big number. The next question you want to ask yourself is, how many more companies are listed, and what was the reason, for delisting some of those companies? Oh, well, we'll take a break now. When we come back, we'll bring you more. The European Central Bank is planning to routinely publish internal pay measures being used by officials to gauge inflation risks as they consider when to cut interest rates. The wage trackers, which are designed to deliver data on salaries in a speedy manner, will be made openly available later this year. That prospect would offer investors a fuller version of the picture that officials are getting on the strength of pay pressures in the economy. Meanwhile, U.S. and European equity futures fell, while benchmarks in Asia traded mixed ahead of the Federal Reserve's policy decision later today. The yen extended its decline as traders stepped up short treasury bets ahead of the Fed's decision due today. China left benchmark lending rates unchanged at a monthly fixing on Wednesday, in line with market expectations after the central bank kept a key policy rate steady last week amid some signs of improvement in the broad economy. China has set an economic growth target of around 5% for 2024, a rate that economists say is ambitious and calls for more stimulus, including monetary and fiscal easing. China further boosts current revival of its battered property sector. Now, most new and outstanding loans in China are based on the one-year loan prime rate, LPR, while the 5-year rate influences the pricing of mortgages. These are the business headlines we're tracking at this time. We'll take a break, and when we come back, we have more for you. All right, I'm still joined by Clive. Clive, if you can hear me, kindly confirm.
I can hear you clearly, Perpetua. Thanks.
Absolutely. I mean, this wasn't last week when we had that issue, right? Okay, so basically, you were saying?
I'm saying, it just so happens it's the power cuts again, showcasing South Africans' problems on national television.
You can say that again. Well, we're talking about JSE, and you took us back 10 years. You can take it up from there.
Yeah, I mean, the last 10 years, at the peak, the JSE was having about 417 companies that were multinationals that were registered on the bourse. However, since then, we are sitting, as we speak currently, with just under 300, meaning that they've lost at the minimum 10 companies every year since the last 10 years. So yes, it's a welcome slowdown that we've only seen 2 delistings at the end of the first quarter of 2024. We don't know if we'll have more. There's still a little bit of issues when it comes to particularly the resources sector, which is your mining companies there are cutting down. What we are seeing a surge of, which is quite interesting, is that we've got companies that are coming back that are deregularizing things, which are trying to diversify their portfolios by having their subsidiaries actually list as opposed to the main company itself. We've seen some multinationals, for example, the most exciting one that's coming up, that's been spoken about the last 3 years, is Coca-Cola. And that will be very interesting because they'll still keep the main company listed offshore in Europe, but certainly the assets that are based in South Africa and the African continent will therefore be listed here on the local bourse. So that's very, very exciting. But still, we've had an exodus. We've had a lot of companies delisting in the JSE, and it just speaks to the challenges that they are facing in South Africa.
Well, I'd like you to speak to these challenges. I mean, what could have prompted these delistings? What are they saying?
You want me to start with the power cuts?
Maybe.
When you don't have sustainable energy, you're going to have problems in the mining sector. They use the majority of our electricity, the power that they need to generate machinery to work through the systems to be able to mine aggressively. So power is one of the basic things that are required. And unfortunately, we are having a crisis at the moment when it comes to that through the state-owned entity Eskom. We also have an infrastructure deficit. What I mean by that is that South Africa's infrastructure has not been well maintained over the last 10 years, and the cracks are starting to show. We've had bridge collapsings, we've had floods that have created a serious water structure disaster. What has happened is, in actual fact, as we speak to you now, we're not just having load shedding through the electricity, but we're also having water shedding because now they have to share the resources, and so that they can be able to maintain the water supply throughout the entire South Africa, in particular in Gauteng, which is the hub of South African business. So all these factors are coming out to bear. They're starting to show the cracks of either a failing system or a failing government that is not conscious of what its constitutional right or duty is to make sure that these services are being delivered. And that does not make investors feel comfortable. So for companies to feel comfortable, to be able to have more IPOs, to have more foreign direct investment, you need to have a working country. You need to have a functional democracy. You need to be able to be open to these markets so that you can create a sustainable environment for them to thrive in so that the country's economy can grow. And it's no surprise, therefore, why our GDP is below 1%.
You've mentioned some of those things, but I would like to, ask more specifically now. What role do you see interest rate decisions, South Africa's upcoming election, and even plans to ease rolling, blackouts? What role do you see these factors playing in driving investor sentiment in the equities market?
Well, there's a strong feeling. I don't know which economics you've learned, but I know a lot of guys, a lot of scholars will say to you that when there's trouble, there's opportunity. With all these troubles that are happening in South Africa, people are feeling optimistic. Actually, they feel that this is it. They're calling this the South Africa's 1994. If you remember, that's when we first went to the polls in 1994, following the release of Mr. Nelson Mandela. And so people are saying 30 years on, it's time that the African National Congress, or the ANC, leaves office. So there's optimism that has been created by that there might be a change in government, a change in administration, which might make it easier for business to prosper. We might have a multi-coalition type of government. I don't know if that has ever worked, but this is going to be the first time we see something like that if it were to happen. And so optimistically, you would say that things might be getting better simply because the economy started to pull some traction. We started to see that with the first quarter. We've had some good jobs numbers, even though the unemployment is still very high, but there has been a decline in the in the unemployment rate. We've also seen you remember we were grey listed, and there's been some financial regulatory framework that's been done to try and stabilize the country's financial system. Remember, South Africa's financial system is used to be looked at as one of the best in the world. At one point, the JSE itself was sitting at number 10 in the world of the best exchanges in the world to be in. No wonder everybody wanted to participate on the exchange. But since the likes of the Gupta saga, you remember the state capture scenario, since the likes of companies like Stefanuti Stocks leaving the country, delisting. Anglo recently also diversifying its portfolios and moving away from South Africa, and with Rio Tinto. We've also seen a lack of regulatory framework that protects the financial services in the country. So all those things have created a little bit of a problem, but there are sparks, Perpetua, that you can see. There are sparks, for example, in the agricultural sector. There are sparks in the energy sector. We are currently, actually, as I speak to you, enjoying the Solar Energy Summit, which is taking place here in Sandton, which is all about showcasing all the alternative energy experiences that we can have. South Africa is also toiling with the issue of having nuclear power. I don't know how America would feel about that, or the West, but all these things are positive, and it seems like there is going to be a turning point. And we've seen a slowdown as well in interest rates being hiked. So that also has brought in a lot of positivity. We are looking at the framework that has been done called the NDP 2030, which is also coming back to support business locally. But what we need to see is transformation, Perpetua, that we haven't seen. And I think the JSE itself has to transform. We need to see more Black companies. We need to see more female companies being listed. And that's what they've done, the JSE now. They've cut down a lot of the red tape that would make it difficult for companies to list. But it comes at a cost of the economy being so dire that you do need something to boost it to make sure that you prosper in the next medium to long term.
Right. Thank you so much, Clive, for sharing your thoughts with us today on Business Edge.
Thank you very much.